All right. Let's take a look at Bitcoin. We got a new month. We got a new week. Let's see what the markets are doing. So, looking at the risk markets, the risk profile, we got Nasdaq March contract, got ES March contract, and I got the Dow March contract, and then I have the continual contract for Bitcoin. Bitcoin settles. Bitcoin settles every month. That's interesting. Are they moving to quarterly settlements? Oh, they moved the quarterly. I got to look into that. I'm going to look into that. It looks like, but just by looking at this chart, Bitcoin is moving from monthly settlements, which means you have to roll over every month, to quarterly settlements, which would be fantastic. I'm going to have to look into that because that's interesting right there. But anyway, looking at the monthly chart, Dow has already taken out December's high. ES is really just behind it. NQ is struggling, and Bitcoin has taken out December's high. So the strongest assets as of right now are going to be the Dow and Bitcoin, since they took out December's high. So we do have a little bit of a shift. Bitcoin is not relatively weaker than ES, and Nasdaq is the weakest. That's what's going on. So Nasdaq's the weakest out of the risk markets. So if you're bullish on Bitcoin, that's great. Let's get down to the weekly chart real quick. See, the Nasdaq is trading inside week, NQ inside week, outside week, trending higher on the Dow. Now, news this week. Where is my Forex Factory? Right here. So, news on the week is yawning. News on the week is nothing tomorrow, and we got NFP on Friday. So we're back to the normal schedule, which is great. So NFP on Friday, I expect that tomorrow is going to be a decent day, hopefully. And Thursday is going to probably be a choppy day. And the real move of the week is likely going to come on Friday. So that's something to watch out for. We do have NFP. So we'll see how the market responds to NFP. And basically, looks pretty good for bullishness. I am watching, if I go to the monthly chart real quick, this level right here, April's high. And when I get to the spot chart, I'll be looking at that. But let me get to the spot chart right here. Here we go. Okay, so the market, let's just go to a higher time frame. I got a lot of crap on this market. None of this is really important right now. The interesting thing on this market is this imbalance did hold, which is generally bullish, right? Because what we could say is that from this low to the all-time high, and let me reverse that, the market traded down into a discount, built in support, and now is trading higher. Now, how much higher is it going to go? That much we don't know. I am watching, now if I go to the monthly chart, that April high right there, that area of price between here and here, which I have shaded in yellow, that's pretty much the most important level to me right now that I'm watching. The market hasn't traded there yet. This stab into December's high is suspect to me, meaning that I think it's probably going to want to go a little bit higher. There is a breakaway gap right here, right? So the market is kind of like inefficient. From this high to this low right here, if I was looking to measure out this move from this high to this low, I would be looking for an area in price that has either a lot of liquidity, so it'd be internal liquidity because it's inside of a range, so a lot of internal liquidity, which is overlapped by an inefficiency. So the overlap inefficiency on the monthly chart is this area right here. Breakaway gap's inefficient. This blue area is inefficient in terms of inefficiencies in price. We have this defined swing high and this defined swing low. That is our defined trading range or our dealing range. And the 50% of that range, a weak market would trade up into the 50% or not even get to it and roll over and fall off and sell off. That didn't happen. That's a bullish signature. Question: how much time did it spend in the green versus the red? Wherever it spends the most time in, it's usually going to gravitate to an area where it didn't spend a lot of time. So that area is going to be here. Now, break that down even to a larger range, because this is fractal, and the parent range, the parent time frame is this big one. Which one spent more time? Which one did it spend more time in? Up here or down here? It's up here. So the market's not going up here to balance up here. The market is going up to balance the range from where it left it. So I don't really need to pay attention to this range because the market has already spent a lot of time up here. It's unlikely to go up there. For instance, if it is going to go up here, it's not going to go up here to fail because it needs to make the market efficient in its delivery. It's going to go up there to get liquidity. And since we are dealing with a predominantly bullish asset, if it's going all the way up here, it's most likely going to go work to the highs. Could it be going all the way up to here and then rejecting? It could. I'm not saying that can't happen, but the way I look at the market is it has no reason to go up here because this range, all up in the red, it's already spent all this time dancing around this range. It has not spent a lot of time right here. And I called this months ago that when the market comes down into this range, it's likely going to consolidate. The consolidation here was not a surprise for me. I wanted to see it get up a little bit sooner, but neither here nor there. But it spent a lot more time up here still, weeks up here, weeks, months up here. The entire yearly range is basically up here from April to November. So I'm watching this area right here. Another area that I'm watching is I'm going to go on the yearly chart, and I'm looking for what areas overlap, what things are overlapping. If I I grade the wick here, and let's see. That's the wrong one. You see it on the daily chart? There it is. No edits. No needed. Not needed. And I'm going to make this real bold, big, rather. This wick. I am anticipating a bearish quarter. I am anticipating maybe even a bearish year, but definitely a bearish quarter. And what I would want to see in this instance is the market open up, trade higher, find an area where it is looking to purge some liquidity, and set a high and roll over and target the low here and the high here. Right between those two candles, I think the quarterly run is going to be. That doesn't mean it's going to happen, but right between those two candles, that's what I'm looking for. So from this high, let me bold this real quick. And I'll make the font just a little bit bigger. I really don't want to see the market go above 101,584.69. That is where I want to see the market stay underneath that. If I take that high, that the opening price, and I just measuring this quadrant. This is going to put a lot of lines on the screen, but got to do what you got to do. 101. What was that number? Hold on. Hold on. $101,584.69. Very specific prices. That's what I'm looking at. Getting rid of that. I'm going to drop down to the daily chart. So, what's around the 50% of that line? That's this level right here. We got the gap here. We have this area in price right here. The low end of that is going to be the April high. This is how I'm getting towards the April high. It's like, I know, it's probably a lot, but what I'm looking for is I'm looking for the market to trade up into that range down here. This area, as you can see, there's a lot of overlapping things. And the fact that there's a lot of overlapping things, meaning lines, that means it's going to be an area that the market most likely isn't going to blast through. And if it does, then it's really strong. Now, I am positioned long. The fact that the market has left this area quickly leads me to believe that 97, just, by the way, note that 97 for 66.14. Just kind of put that in your head. This is telling me that the market is going to seek liquidity resting above the marketplace, which, when I look down, is going to be right up in here. We've already taken out this high, but it's a shallow purge, right? It's just a little shallow nick. Now, anybody who thinks this thing is going to go lower, so it might be pulling back, we might be getting more shorts in here. Might be getting more shorts building up right in this, people shorting this. Their stops are likely going to get nuked for another leg up. I do like the idea of it going another leg up because this is just shallow. A shallow stab. I want to see more of a bigger stab up coming down into this 95 area. Working in this range right here. Now, what if it doesn't get up there? Well, if it doesn't get up there, it doesn't get up there. That would be a signal that the market is actually weak. The first thing we would notice inside that would be essentially losing the yearly open. So the market can... Down close candles, the question you have to ask yourself, are down close candles supporting prices, higher prices? So if we look at down close candle, starting with these two, draw them over, yes. This one, market couldn't even trade to this one, it just blasted through it. So what does that mean? This is on a 4-hour chart. There could be a down close candle up here on an hourly chart. Yes, strong. It has no willingness to go to it. So we just say, yes, strong. Held that imbalance right there. Next one's here. Obviously, broke through that one aggressively. Next one right here. Once this high, did this candle hold higher prices? Yes, it did. So, likely the market is going to continue to hold higher prices. On this order flow, what does that mean? Order flow is bullish. So if order flow is bullish, what does that mean? Be bullish. Okay? The market has not turned bearish yet. So I'm not blatantly looking to short up here. I'm waiting for the market to tell me that it's going to... This is a bullish leg, a very strong bullish leg of price. You don't want to be jumping ahead of that. People are, but I'm not. I'm going to sit and wait. So I'm riding along. I'm looking for it to go up to April's highs. I've already taken multiple profits. The portion that I have on is insignificant. I've already made over 10 to 1 on this trade. So there you go. And I took partials along the way. Still made 10 to 1. So looking good right here. Not much more. I'm still looking for the market to trade higher, and I'm predicting the market is going to pull back or reverse above the December high, and I'm still ready for a bullish trade. One area to watch is going to be right here for me. First signal that if the market loses this imbalance right here, if the market loses this imbalance aggressively, something like that, and then utilizes it as resistance, or he can't even get to it, that's going to tell me that this is probably done. So that's on an hourly closing basis. So right now, everything's making higher highs and higher lows. This is the higher low for me that needs to be broken. This is the higher low that, for me, that needs to be broken, because this low set that high. So if this low is broken, that's going to be where, for me, is where when it shifts bearishly. Depending on how it does it, if it does it like slow and choppy and grindy, I'm not really interested in that. I don't believe it at that point. I'll watch to see how it reacts here. But if it does it aggressively, with a lot of speed and a lot of energy, then I'll be more willing to say let's probably set the high. All this doesn't matter if a new high is made. If a new high is made, that high gets taken out. This analysis down here, insignificant, because there's going to be a new range that I'm going to be looking at. And that's that. So bullish until this area right here. June low to April high. This area is where I'm looking for specifically. Has these highs right here, here. I'm going to see if it wants to work this imbalance up here. But I don't expect it to spend too much time in the red. Once it gets up here, I'd like to see it break down rather aggressively. And it could take several weeks because you're dealing with a large range. So the market could come up here. That doesn't mean one time and go. It could spend 3 or more weeks in this because you're dealing with this. But in the grander scheme of things, it's such a large range amount of years of time, an entire year of time, really. If it spends a week or 2 or even 3 inside here, that's not necessarily that's quick movement out. So, and that's that. That's what I'm looking for. So higher prices, and once there's a breakdown, I'll be looking for it to reprice down in here.